Hello, Oracles. Welcome back to our Friday night live stream. Ending this week, probably the best week we've had in, my goodness, over a year maybe. I don't know. It's been a while. And tonight we've got Vin from Investment Club. You guys all know Vin. He is joining us to celebrate this wonderful run we had this week. So, Vin, how you feeling about earnings?
Feeling pretty good. I thought it was a great report. Once again, able to deliver a stellar earnings report in a very challenging year. And I think that there was a lot of great little nuggets of information that we got. Happy to
Oh, yeah.
jump right into it.
Yeah. I mean, looking at it from me, like the big takeaways I got just from kind of like not a specific, like I don't know, not from a level to level standpoint, but just the fact that they came out for the first time with a specific, we're shooting for a goal of 1.8 million vehicles for production. We usually just get the 50-year, compound growth, but this time we actually got a specific number. It's like, wow, that was pretty awesome. And they were pretty open. Like I went through the questions that they had on say beforehand, just to, you can kind of tell how they're going to, answer things. And, like when they were talking about the margins, I thought they were going to punt that one, but Zach just gave it like it was. I was pretty happy about that. And obviously the market enjoyed it too.
Yeah, this is craziness. I really, after yesterday, I was like, all right, it'll probably tomorrow give back all the gains like it usually does. And this thing just keeps running. What is it up, like 60% year to date?
Yeah,
Not
something like that. Well,
complaining.
you think about, I'm just trying to do rough, easy math in my head from the bottom when we hit just under 102. I mean, make it super easy. So if we're up to 177, it's basically a 75% gain on the year because, up from 100, that's about it. So
I was just looking at the chart. So I've been getting into a little technical analysis lately. I'm a very novice. Preface this is like, don't listen to anything I have to say. But one thing that was really interesting, I thought, is the volume has actually been increasing. So they just had 6 straight days of green days for Tesla. Green days, 6 straight days, and it actually today had the highest volume. There was 300 million shares traded today, which you think that, if the rally was slowing down, I mean, obviously anything could happen on Monday, but it tends to kind of show that it's running out of steam and the volume starts to declining, and yet it's going up here. So today was crazy. I don't know where we're going to go from there.
Yeah. I didn't even, I just happened to hop on before we got on here. I didn't even look at volume. 304 million shares. Dang. Wow.
I mean, I think that might be the most shares that have been traded in about, I was like trying to go all the way back, maybe the last year, definitely the last 6 months, the highest volume day. So
yeah, because yesterday was the highest that we have seen in a year at that 234. So this is definitely by far the highest. And then I was looking at RSI because I'm like, we're definitely pushing up into the overbought range. On the daily chart, we're at 72 on the RSI. But on the weekly and the monthly, we're at like 45 and 46. So just still below even the median range. So that's pretty nice to see. I'm getting news from my dad and, other analysts that are saying, we're looking for a strong push that we could be getting. We got FOMC meeting next week. I don't know if we're going to continue pushing higher. We've seen Tesla stay in the overbought state for a 2-week stint. So
yeah, I don't know, man. What exactly is the RSI? Like, how does that calculation work?
So the RSI, and I don't know if we can see it well here. So the RSI is the relative strength index. So that here is, now let me get up on my screen. So this is this here. So 72.59. So they give you the range of 30 to 70. Anything under 30 is considered oversold, and anything over 70 is considered overbought. So typically, when you go below or above that range, under 30, you're typically going to see a lot of buying pressure coming in. Over 70, you're going to see the selling pressure come in. And again, it's not always exact. So like if we go back here, you can see that we were oversold for almost a week, and then you go back to the Hertz news. Let me see. That's October 21. Yeah. So Hertz news, we were overbought for a long stint. So it's not an exact science, but typically when you see that, you come back the other way. And so here, obviously we were oversold and now we're running back up again.
Yeah, the technical stuff I've become pretty interested in lately, just because like I always kind of looked at technical analysis as like voodoo astrology type stuff, and I just like never really paid any mind. But I, what I've like found so far is it works until it doesn't. You know, it gives you an idea of like the trend. And okay, so like for example, like I've been looking at the moving averages. Tesla's 200-day moving average is around 230. So usually what'll happen is like that if it does keep going up, tends to act as a resistance, you know, the 50-day trying to get over the 200-day. But if it does break through, then it tends to be a bullish indicator. So these things just kind of, it's interesting to watch, and they kind of work until they don't. But it definitely all paints a interesting picture here. Like you look at the RSI, you look at how much volume we're getting. Very interesting time here.
Yeah, and you know, when you start looking at multiple different factors and they all kind of converge in the same place, you're like, okay, now we're looking. And then you start looking at patterns. And I did a video the other day. Somebody was going over the patterns, and like this here is what we would consider a cup and handle pattern. So here's your cup, and then we're coming up to the handle right here. And that typically means a bullish pattern. So we're going to be breaking out. So here's the cup, here's the handle, and then here's our breakout. So, and again, like you said, some people think it's astrology. Obviously, Stephen Mark Ryan does. But what I have learned in doing this is when it comes to long-term investing, the charts mean nothing. The only reason I use the charts is so that I can see when I think we're going to be pulling back so that I can add heavier. That's really it.
Yeah.
And of course, then I learn from it as well. Now, this year as well, you know, looking at the fact that, you know, we're probably going to be in a sideways market, but there's going to be a lot of swings just like we're seeing right now. We have a lot of gaps below us. I'm believing that we are most likely going to be pulling back to fill a good chunk of those gaps. If the market anticipates us being sideways, think about how the market traded for the entire last year. Interest rates were going up, market came collapsing down. Now, the Fed has already told us that they're going to basically be sideways with interest rates for the entire year. So the market's going to trade sideways. Nobody makes money if, you know, the market stocks just stay still. So what's going to end up happening is hedge funds and options traders are going to come out and they're going to swing the stock. That's a lot of the volume that we saw in Tesla the last couple of days, heavy options trading. So this is what's going to come in. We're going to have the heavy options trading coming in. As soon as they're ready to make that turn, they're going to come out and a bunch of hedge funds are going to end up shorting, bringing it down, causing those swings. And that's how they're going to make their money this year. So we're going to see a lot of this swing trading. So following the charts this year could be very beneficial if you're a swing trader or an options trader. You're still doing options, right?
Yeah, that was the other thing I was going to say is I would agree with you. Like, if anything, like I'm using the technical stuff to, you know, maybe determine, is this an opportune time to, you know, make a big purchase, or if I'm doing any options, selling any puts, which, you know, that's a whole other thing. Like with Tesla, it's just so volatile. But yeah, I've been doing some options trading with other stocks, and you know, obviously the technicals helps a lot with that. But I'm curious, I guess, to switch gears a little bit. What most excited you out of this earnings report?
Most excited me? Oh man. I mean, what really drew my attention was their specifics on the numbers. Because obviously the numbers weren't anything that blew me away. Their guidance wasn't anything that blew me away, as far as the actual numbers went. But the fact that they gave us specific numbers, I think that's really what got me. Was that, and that chart with the energy, seeing the S curve starting was the big one for me too. I love that chart.
I would agree with the energy and the insurance. For me, were like two little golden nuggets in there. You know, energy, obviously, people know, I'm sure, more about, and it's growing faster than the auto business. And, you know, if there ever was a severe slowdown in the auto market, they have the energy, I think, that they could kind of just flip that switch on and really run. You know, it could obviously potentially be even bigger than the auto market. They could now, once we get to a surplus of batteries, once we get the 4680s and everything ramped up and going, there's a lot of exciting stuff over there. But the insurance, Tesla insurance, was really interesting to me. So they don't even report it out as its own thing because it's not significant enough yet. But they mentioned they have a $300 million annual premium run rate right now. And the insurance is growing 20% a quarter. Not a year, a quarter. So that's growing even faster than the auto and the energy.
Yeah.
And that's only in, I believe, 10 states, 10 or 12, right? So that was
Right.
really interesting to me.
Yeah, and so obviously, when they get into more states, but I loved Zach's transparency on it, just saying, "Hey, the money that we're bringing in is not going to make a significant difference." But you have to remember what he said was the reason they're doing this is to make a better customer experience
Mhm.
and better cost effectiveness for the customer over the long term of the vehicle, because now they can do it. And then, of course, as Elon said too, now they're in this loop that they have very fast, immediate feedback on what's going on. It's actually helping them change the design of the vehicles to A, become safer, and B, become easier and quicker to repair so they get it back to customers sooner. So it's like, so now they're
Right.
using this information. What other company can do that? Like if you have third party information from, from these insurance companies, you're not going to get that information, and at least not in a timely manner. So, you're going to be sitting here waiting to get this info. Maybe it's going to be accurate, maybe not. Who knows how they're collecting that data? Whereas Tesla's like, we got it. Hey, you know what? Like Elon said, it's like, that bumper could probably use some help. All right, we'll fix the bumper. We're going to make it easier to fix. Good, done. Like absolutely incredible how they operate. And a lot of these things people don't understand. Coming from manufacturing, I've been in retail, and just so many people don't take into account how much money you can save on the bottom line by being more efficient, because it's not a number you can really see. Like you're like, all right, if I get rid of an employee, I can count that number. But when you're fixing a vehicle and creating efficiency, time equals money, and putting a number and a dollar amount on that time is very difficult.
Yeah, I wrote a little bit about it in my last Substack article, and like you had mentioned with the bumpers, they're just demonstrating the continuous improvement, the constant innovation that the insurance was started to make the cars more affordable, and they're going to make it into something that ends up adding more profit margins to their business. And I couldn't help just, draw these parallels between Amazon. It's like, what made Amazon so successful? They made everything absolutely prioritized, utmost convenience for the customer, making the customer happy, making their life easier. And I think this is like a perfect example of that same kind of business model where Tesla Insurance is saving you money, a lot of money if you have a high safety score, but it's also just making it more convenient.
Oh yeah.
The repair times and the cost to you is all being reduced. So obviously, like, these are just more incentives to go with Tesla and go with Tesla Insurance. And the other part that was interesting too about it was that they kind of said that the people who are opting for Tesla Insurance tend to be, getting it on the new car. Like if they already have insurance with someone else, they tend to stick with that insurance provider. So it's definitely a very sticky business. So, in the short term, it might be slow, but in the long run, I think more and more people opt in for Tesla Insurance. I mean, it is growing, as we said, pretty significantly, but once they're in there, they're going to stay there. So they all of a
Oh
sudden, they're
yeah.
just going to have all this recurring revenue that's just going to keep growing and growing the higher volume they achieve. If we do 2 million cars this year, and they have 17% of customers opt into the insurance, maybe it goes up to 20%. All of a sudden, they're just making all this money appear out of thin air.
Oh yeah. And you think about the fact that like that's part of their ecosystem now. So I would have no doubt that you go into the future, and guess what you can buy insurance on? Your power walls, your solar. And I have no doubt they're going to lump that all in there. And I
Yeah,
have no
home and
doubt that
auto.
it's,
That's a good point.
yeah, so they'll have that. And then you know what? Oh, hey, renter's insurance. They'll get into all of this stuff in the future. Now, I mean, they're already starting to do some of their own underwriting. So why would they not? And like you said, just the money that they're going to be pulling in from that, especially if they're in control of, hey, you're going to get insurance on our vehicle, but we're already creating a vehicle for you that probably isn't going to need insurance. So the money you're going to give us for insurance is really going to be pure profit in our pockets.
It's really exciting. Like, it's hard not to be optimistic, to me at least, with this company. And I know we had kind of said, in previous videos that like 2025, we thought by that year it was kind of the pivotal year where it's going to like make or break all these other automakers. I
Yep.
think with these price moves, it might have been pushed up to 2023 because I mean they're competing now with the Toyota Camrys. Like things are about to get crazy real quick. Like these other
Oh
car
yeah.
companies, everyone else's sales were in retreat in the 2022 wasn't great times, but it was pretty good still. I mean, we weren't really in a official recession. And the fact that every other automaker, their sales declined, with the exception of GM, whose sales grew 3%, to Tesla's growth of 44%. Everybody else declined significantly. So what's going to happen this year if we do enter a severe recession? Elon had mentioned on the call that, he thinks there's a high chance we do end up in a recession, a severe one maybe. And, Tesla's just going to keep, every Tesla sold is one less of these cars. So it's just simple math to me. If they're going to make 1.8 million to 2 million cars this year, another couple 100,000 are dropping off of the bottom lines of the other companies, and they're already struggling. So I just don't see how it works out well for them. And I think this is Tesla's market to really, as much as they can produce is theirs for the taking.
Oh yeah, I mean, and we saw that, and we could definitely tell that they're sandbagging. So coming in with 1.8 million, obviously, if we run into some issues, that's why they did that. But if we run into no issues this
inevitably,
year, then 2 million is a no brainer. And then, of course, as you said, with competition, Toyota. Look at what's going on with Toyota. I don't know if he's on tonight yet, but one of my guys, Blue Collar Disruptor, he's talking about that was not a planned move. Like, they did not plan this. Like, Akio was planning on staying there until 2028 to 2029. So him just dumping out the day after Tesla's earnings, that's like, way too coincidental for it to not be related.
That is really interesting. It's there's maybe we're going to see a big shakeup, maybe, because I think that going back to those price cuts, and Tesla is now a clear and present danger to all these companies. There might be a lot of shakeups to follow in other companies.
Well, and so one of the things I noticed the other day, and I was talking about it, was we've now seen Toyota CEO steps down, VW. They got rid of Herbert Diess, and the guy that they brought in, is more about gas vehicles, and they pushed off their EV plans until the end of the decade. GM is investing almost $1 billion in a new V8 engine. Like, if we have regulations coming out saying that everybody has to change to EVs by 2035, why is it that we have these legacy automotive makers still pushing for ICE vehicles? It makes no sense. And the only thing that I can draw from this is the fact that they realize they are so far behind Tesla that they're doing everything in their power to slow down EV adoption because it's moving faster than people thought. And they're like, we can't catch up. We cannot keep up with this. We know we're going to fail unless we continue to push our ICE vehicles. That's the only thing I can think of.
Yeah, I was just seeing how GM, they're investing something like 800 million in their next generation ICE factories, and it's like, it doesn't make sense if you look at it any other way than what you just said. It's like, they're just so far behind that they're not even going to try, and they're just going to kind of milk the cash cow, for the time being. I mean, they don't have much time left, because I think what's also going to start coming into play, I've said this before, I don't think we need to ban ICE cars. I think that the electric vehicles is just going to become a no-brainer. You're not going to want to own a gas car. It's going to be obsolete. I mean, I'm already looking at, like, I had done a Twitter poll, and someone replied with how much money they've saved on gas. And in 1 year, they saved $5,000. That was the savings. It's insane. That was like with the power they had to pay for and everything. And, after 6-7 years, the car pays for itself if you're spending that much on gas. And that's not even factoring in maintenance. I just went down to the Toyota dealership last week, $130 for this. And then next time I got to pay $300 for something else. Yeah. It's crazy. Like, it's just the car, they're already selling themselves. They don't advertise, but more and more, I just think you're going to see the norm, like the EV adoption. They're there. The parity is there. And now they're quickly going to surpass in, the specs, in how much money it'll save you and be more convenient. And I think conveniency is a huge trend in society. Obviously, we've seen the success of companies like Amazon, Netflix, Uber. What have they ultimately done? They've made people's lives more convenient, made it easier for them. And I think you're going to see something similar with EVs, and especially Tesla, like we said, with the insurance, but the cars itself. It's like, it was really interesting for me to see, actually. A lot of people replied to this poll. I asked them, is it more convenient, do you find, owning a Tesla EV versus a gas car? More convenient or less convenient? Overwhelmingly, it was more convenient. And I always just kind of assumed that the one drawback was like a long road trip. If you had to do a long road trip, it's probably not ideal. And yet so many people said the opposite. They said, first of all, everything else way better. You just charge the car at your house every night. You don't have to go to the gas station. But even road trips that they were saying they actually prefer with the Tesla for a couple of reasons. One of the big ones was with the full self-driving, they were finding they were getting to their destination and they just had way more energy. It's so exhausting when you have to fully focus on this road and you're driving 5-10 hours. You're exhausted when you get to where you got to go. You got to sleep. You got to rest for like a whole 24 hours. But with the full self-driving, it's greatly helping that. And then the other thing that was interesting was they actually were saying how they liked, having to stop to charge. It forces them to get out and move around, which they also found they felt better when they got to their destination because they weren't just sitting down for 12 hours.
Oh yeah. My friend Tony, he's taken his family from Connecticut down to Florida several times. And he said, what it comes down to is it's more convenient, but you just have to do a different sort of planning along the way. So, you still have to stop for gas in most cases. So now you just stop at a charger, but instead of stopping, at a charger or at a gas station and then trying to find somewhere to eat, he's like, you just find a place along the way that has food nearby. He has literally mapped out every charging. Like he gave me a whole list that he checked every single one. He's like, one of the charging stations just wasn't safe at night because of the area that it was in. But like he made all these notes all along the way. So now he just plans out on his trip and he's like, all right, this is the best charger to be at here. There's a place that we can eat right there. So I'll be down probably around 5% battery. We're going to go charge that. We're going to go run over to eat. We're going to come back and it's going to be up to the 80 to 85% that we want to be at. We'll hop in the vehicle and go. And you can't do that at a gas station. At a gas station, you have to sit there, pump your gas. Sure, maybe it's only 5 minutes, but now you're taking in the fumes and all that stuff. And then you've got to go park your vehicle again. And then you've got to go in and eat. Whereas this year, you get out, plug in the car and go do your thing. He was also mentioning how, you don't have to use a credit card. It's all on your app. So you just go on, and it's not even on your app. He's like, you plug in and it knows. It's like, hey, this is Tim's car. Hey, we've got your card on file. We're good to go. I know, I literally just saw on the news the other day talking about skimmers in the gas station pumps. Don't have to worry about that. And I know I've fallen victim to that at an ATM before. It sucks. So many benefits. So yeah, going on those long drives, just plan a little bit different, but it can be a lot more convenient.
It's incredible. You just plug in, get back in your car, watch some Netflix for 20 minutes. It's crazy. It's just so beyond anything else that exists right now.
And that's true. And that's the other thing too, is, you think about most ICE vehicles don't have that entertainment system inside their vehicle. So you're charging for 20 minutes, but watch a part of a movie. You can do that.
Or watch Oracle Investments on YouTube and hit that like button while you're there.
Yeah. Or investment clubs, same thing. So then we got Jerry here. The slower OEMs ramp, the larger market share Tesla takes. Absolutely. And it only helps Tesla increase charging stations and energy ramp. So the charging stations, we've seen Electrify America. Those charging stations just suck if they even work. And, so just seeing all of that. And the only thing I can think of with Legacy Auto is them pushing what they're doing is because they get so much margin and profit from the parts. So they need to sell as many ICE vehicles as they can, knowing that by 2035, they're done. They're done with ICE vehicles and they're going to have to make up their margins and profits somewhere. So they want to get as many ICE vehicles on the road as they can to be able to get all of those parts and service people in. This is Jason DeBolt. Yeah. You guys see Jason DeBolt has sold his house. He was talking about that before. So I knew I thought he had done it before. I thought he did it in December, but I guess he just did it now and dumped in. So yeah, it makes sense. He was talking about it. But I think he's got, 48,000 shares now?
I was trying to do the math. I don't know if he's at 48 or 48 plus the additional 10,000 he just bought, but I think he made about $1.2 million today. So congratulations, Jason DeBolt. That was a good move so far.
Yep.
That's another thing.
He said he got out of margin too. So that was awesome.
Yeah, that's big. Yeah, because these last 6 months has really showed how important that is, because you just can't predict in the short term, utter craziness. Who could, the stock was down to 100 with no signs of stopping. Now it's up 60%. I mean, it's crazy. And it's just to me, I want to sleep easily at night. But seeing Jason's amount of shares, I was thinking, I'm like, is there such thing as too many Tesla shares? Like what is the minimum number to get to where like I can be content and never have to worry about money again in my life?
Here you go, Vin. If you want to share, how many do you have? I've got just over 56, almost 57 myself in my main portfolio. I don't have much. Well,
Yeah,
for me, I don't.
I've been buying since 2019. So through 2 splits, I think I'm up to something around 1,600. I gotta
Nice.
check somewhere in that
Nice.
area.
Yeah, I know. I'm almost at 57 now. But today with the movement, I'm back up to 69% of my portfolio is Tesla again. So very happy
Nice.
about that move. And what I'm gonna do is actually I just did it yesterday. Because I got it from a bunch of my subscribers that they swing trade in their Roth IRA. I'm like, this is perfect. And that's how they've just been accumulating so many shares because Tesla's so volatile. So they wait till it's kind of pushing to that point where it feels like it's going to be sold off a little bit. They'll dump out some of their shares, wait for it to pull back, buy back in lower, and they just keep on multiplying their shares because now it was increased, but you can only add $6,500 a year into your IRA. But you can always swing as much as you want within the IRA to be able to make more shares and more money. So it's brilliant. And so I put in a stop loss. I ended up selling out 3 shares around the 157 mark. And I'm waiting. Oh, I just put in another 3%, 3 shares at 3% today. So it hasn't sold off because it didn't drop 3% today. So those will sell off when it comes down 3%, and then I'll just wait for the drop on it and I'll buy them back in.
Yeah, it is. That's a great strategy using the Roth IRA. That's a great point. It's just so hard to, like, you know what you have to do. You have to be fearful when others are greedy, be greedy when others are fearful. And yet it is extremely difficult. Like just human nature, human psychology, like it goes against every way that we are programmed. And you know what else the problem tends to be? Whenever it's crashing to like the lows is like the worst possible timing. Like I was trying to buy a house. I had put all my money in already. And I'm like trying to like come up with some more to buy it at the low. And then it didn't stay there very long. I mean, the fact that it's up like 60, 70% in the last month is insane. And like, it's just so hard to do what you're supposed to do, and making sure you have the cash for those opportunities and whatnot.
Oh yeah, I know for me, like, and I said it wasn't going to V bounce, but clearly we just V bounced. But I don't think this is not to be bearish. I don't think this is going to last. But this is awesome. And like I looked at that dip, and one of the things I taught myself before we ended up even coming down was one of the struggles I had going through 2021 and even through the COVID crash was I never had a same situation as you. I was always all in, and I never had cash to take advantage of those opportunities. I was a typical retail investor, which was just that is, hedge funds and big money know how retail investors play with their emotions. It's just human nature. They've taken that out. So they play that intentionally. They're like, we're going to give you opportunities to buy. We know you're going to buy at these levels. You buy there, then we're going to have it drop even further. And you're going to get so disappointed. And then you're going to get concerned. Do I sell out now? Is it going to fall back further? So either people sell or they don't have enough money to buy. Then big money
They're waging a psyop.
Yeah. Then they come back in and they end up, they buy more and push it back up. And then as it comes back up, now you're catching FOMO on the way up and they're already getting ready to sell off and bring it back down again. Right, so I finally did what I do now and came up with this mathematical equation based upon my income, how much I want to invest, how much I'm saving for cash. So I'm always putting money into cash. I'm always buying Tesla, and I'm always putting money on the side for even more. So this way, whenever we do get a dip, I will always have something to buy with. Even if it's not a ton of money, I always have something to buy, and I never have to worry about that emotional swing of, dang it, I don't have any money.
Yeah, I'm with you there. Like I definitely learned that lesson. Going into 2022, I was all in, fully invested in Tesla and a bunch of other companies, but Tesla was my largest. I think at the time it was like 80% of my portfolio when it was at its peak, 1,200 a share pre-split or whatever.
Yeah.
And, in hindsight, it's easy to say, all right, that probably would have been a good time to trim, because that's what happened. Is unfortunate. The first 6 months or so of 2022, I'm just watching it go down and down and down. And like, I didn't have any more dry powder. So I kind of took the second half of 2022 and I sold off a lot of other positions that there's nothing I can find that I have a higher conviction in. So I was like, all right, I'm going to get rid of all this, prioritize keeping all the Tesla shares, and just making sure that moving forward, I have some, cash position available. It's also been nice. The one nice thing of the raising interest rates, the fact that you're able to actually get some sort of return. Now it's up to like 3-4% if you put it in CDs. I've been doing some brokered CDs. Actually, I got to make a video on this because I didn't really know it was a thing until about 4 months ago. But you can put your money in a 1 month brokered CD. So 1 month CD, get the 4% annualized rate, or whatever the interest rate is up to now.
I've been doing that since the beginning of December. My dad told me about it in November, and I pulled the trigger right after Thanksgiving. It's been awesome.
Yeah, and then it just ensures, that you're always ready. If we do have another freak flash crash, that you don't get caught with your pants down. And so I'm moving forward. That's kind of my plan. Is like I'm continuing to buy these days. Every Tesla I see, I'm putting $10 in. So like every road trip, it adds up a lot. But other than that, I'm kind of just like trying to build up the cash position as well. And I'm definitely much better prepared, going into 2023 now than I was for 2022. That's for sure.
Yeah, I've been rolling with those CDs. My dad told me about it. And when I first started, it was like 3.5%. But yeah, so what I did was I actually took my money and I split it up into quarters. So it was like every week I put something in. So that means that I'm always like, right now it kind of ended up hitting a loop. So not until the end of or middle of February, I'll get the money back. But I try to do it so it's like every week I'll have something expiring and then I can roll it into something else. Interest rates have still been going up. So they're all at 4% now. And then what I ended up doing was, I like the dividends. So, I've got JEPQ and JEPI. So I took $1,000 and I threw, some of it into each one of those. And then I rolled the rest back into the CD. So, because they were still volatile, I still don't know what's going on. So until we get that indication from the Fed that this is what's happening, I'm going to just keep on doing that. And I'll put a little bit into the dividend stocks and the dividend ETFs. And then I'm going to put the rest into CDs. But yeah, it's brilliant. It's 4%. Like what we saw last year, could you have made 4% on anything unless, if you were an Occidental, you would have done great. Some of the staple stocks did very well. But anybody who was in growth stocks just got pummeled.
Yeah. You really just got to be contrarian is all it comes down to. And I've just personally, for me, I think I finally like found the sweet spot of like knowing that I can buy Tesla and save the cash in a ratio that makes sense, that I capitalize if it goes up. I'm prepared if it goes down. If we have a recession and things get crazy, I'm prepared either way. And just after the last few years, for me at least, I just feel like that's the best approach, because you can buy enough that you get to reap the rewards of, if you're 90% invested in 10% cash, let's say, you can reap the benefits, but you also have some dry powder if things hit the fan. So that's kind of what I've found is helpful.
Oh yeah. Just to be able to keep your emotions out. The fact that you always are ready for anything, you never have to be emotional. It's awesome. And this is true. Why when you look at ETFs and big money, their funds that they have, that's why they set percent limits. So they say, all right, well, we're over 10%. I trim that position, bring it back down to under 10%, and then I keep going from there. And that's sort of what my portfolio was looking like. I set those limits, and then finally I realized, just like you, like my conviction at Tesla is so high. I'm like, all right, I'll let that one run. That one's got to go. So I'm kind of doing that, but I can still see every day. And actually, what's awesome? I noticed by having both JEPQ and JEPI, they have the different stocks in their funds. One of them is a value play. One of them is a growth play. And you can see very easily the sector swings. We're now swinging into growth because JEPQ is going up. JEPI is coming down. So just paying attention to how those two are moving tells me exactly where I need to be moving my money, and knowing when we're going to get those swings in Tesla.
Yeah, it's interesting. Like going back to what you said with the 10% limits, a lot of funds and fund managers will have. Originally I think about 10% of my portfolio was in Tesla, and now I don't know after the last couple of days, but it's 6x basically, or at least the way I've been, dollar cost averaging since 2019. I'm up 6x. That's how it got up to being 60% of the portfolio. And it's like, well, Am I going to punish it for being a fantastic winner? Like, no, because the future to me is still so bright. I really think it's just getting started, because I tell some people and they're like, you're crazy, like you're out of your mind. But I don't know. I just, maybe I am, but that's why like it's challenging to like find that balance between I like to sleep at night, but like I don't see any greater opportunity over the next 10 years, at least the way things stand right now.
Oh yeah, and for me, like I'm obviously not going to sell any of my stock unless it's in my IRA strictly so I can try to get more. But what I look at is when it starts going up, like we're not really pushing too high yet, but sometimes I just don't add. And these are the times when we're coming up where I'm just adding more to my cash stockpile. And my limit now is my 10% in my cash. When my cash hits 10% of my portfolio, that's when I start dumping heavier into the stock itself. And usually that happens because when the stock price comes down, the percentage of my cash in my portfolio goes up. So that tells me, all right, we're hitting this nice point right now where I can start buying even heavier now. So that's the 10% I play with, is just in cash. And I have some crypto which goes wild, but I'm just adding little bits there. But it really doesn't come down to selling for me. It's more about I'm either going to add heavier or lighter based upon just how we're going. What's going on, Karav? Let me see.
I think the two other really interesting nuggets I've thought from the earnings were when Elon was asked about Twitter and the whole, has there been any brand damage to Tesla because of him, getting involved in politics? And his answer, I think, said it all. Is pretty fascinating, that he basically just said, look, I have 127 million Twitter followers. I am the most followed person on Twitter, maybe on any social media platform in the world. Clearly, a lot of people like him. I mean, you've got that, the squeaky wheel always gets the grease. I think it's a minority of people who really are so vehemently anti-Elon Musk. And I think, like a lot of things with the media, it gets blown out of proportion of how many people actually feel that way, or at least enough to say, I'm not going to buy a Tesla because I hate Elon Musk so much. I think it's been completely overblown.
Oh,
and
yeah.
the thing that's interesting too is, I've been wondering, like, most people on the left were going to buy an electric vehicle anyway. So maybe worst case, he's really triggered like that extreme 10% of that size so much that they will not buy a Tesla. It's so superior, but they're not going to buy it because they just hate Elon Musk so much. But meanwhile, I think that he's gained a lot of respect and attention from the right of center here, and a lot of the Republicans who weren't even considering buying electric vehicles. And now if they do buy one, I think there's a very strong chance it's going to be a Tesla just because of everything he's done to kind of rebalance everything. I loved what he said on Twitter the other day. This is the way it just should be, when he said, we're going to be fair and equal to both sides, of the aisle. I mean, that's free speech, right? But so anyway, I think he actually, despite what the media has said, that he's ruined the Tesla brand and so many people are going to buy Tesla. If anything, he might have actually just convinced a lot of people who weren't even thinking about EVs to buy a Tesla. So it'll be really interesting to see how that plays out. But either way, this free advertising that Tesla has mastered, that Elon has mastered, just continues, because Twitter is a great way to reach millions of people. Like I said, 127 million followers for him that he has a direct line to for free. All these other companies, they can do their Super Bowl ads and do their, Ford Mach-E commercials. And what ends up happening? Everyone's going to go buy a Tesla anyway. It's more free advertising for them. So I think that the whole Twitter thing, Twitter's going to be a huge asset to Tesla, I believe. And then I had one other thing, but yeah, what do you think?
Oh, yeah. Well, and as Harry said here, that was the worst question. And I agree. And so you also have to remember that there is still 95% of the automotive market that isn't in EVs yet. Do you think of that 95%, the majority of them give a crap about Elon or even are on Twitter? Like, most people don't even know what's going on. They hear about things like I talk to people all the time who, like, yeah, sure, they've heard of Tesla, but they don't know anything about EVs. They have no idea the advantages. They don't know anything about it. They're totally uneducated because they're just not in this space like we are. And so when it comes down to, the brand damage, I had Brian on from My Tesla Weekend for earnings night. And, there's two different camps, and he and I are in the different camps. And one is that they feel like, it wasn't a good answer to the question. Like, who cares about his Twitter followers? That means nothing about brand. But if people are relating Elon as the brand and Elon's popularity is going up, that does make logical sense that if his popularity is going up and he is the Tesla brand, then the popularity of the Tesla brand is thereby going up. I see the other side of it where they say, sometimes people like to watch a train wreck. So he has more followers because more people want to see the madness that he's got going on over there. Sure, but they're still going in there. And guess what? They're in Twitter. They're now using Twitter. They're going to be using Twitter, maybe paying the $8. That's more people that are going to be on Twitter, and thereby enticing more ad revenue coming in, thereby meaning that he's going to have more revenue for Twitter, which means that he doesn't have to use his own money for it. He already has ESPN and a whole bunch of other networks that he's working with to get the news onto Twitter. He's been encouraging his competitors to come on Twitter and not even advertise, but just be like Elon and just do exciting stuff. Like,
yeah.
Yeah.
I hate to say it, and I'm going to try to not vomit while I say this, but the perfect example of how you succeed now through this attention economy, through social media, I got to give it to them. The Kardashians have mastered this. They have massive followings. Any one of them could start a $100 million business tomorrow. It could be anything. They could be selling poop on a stick, whatever it is. Like, it doesn't matter. They have massive followings because they have mastered the attention economy. I mean, it's crazy. You saw Kim K was talking at the Harvard Business School the other day. But like, at the end of the day, I can't argue that they have kind of figured out business in the modern economy. And I think this trend is only going to grow, as the creator economy really starts to blow up. And it's all about attention. It's about getting people's attention. Well, who's at the forefront of people's attention? Tesla and Elon Musk. So It's got to translate, like you said, the follow count is growing. Maybe you convert every 1 in 100 of those people into a customer. The more eyes you're in front of, it's only going to help, especially as I think this is where the economy is kind of headed over the next 10 years.
Oh yeah, and like they always say, no press is bad press. This is where Elon is the genius that a lot of people don't understand. He is perpetually keeping Tesla in people's faces. Like, that is brand recognition like crazy. Everybody,
all for
every
free.
day, always. Tell me one day that has gone by in the last 3 years that you have not seen Tesla in the news for something. I mean, it is everywhere. Good. And this isn't just because we're in the Tesla universe. It's like everywhere. Like, even on my local news, almost every day, Tesla is on there for something. It's just crazy. Let me get into here. Abhishek with a little. When do you see a pullback? Seems like so many gaps were created. Where's RSI at? Yeah, we talked about a little earlier. So the daily RSI is at 72. Weekly and monthly are around 45 and 46. So when we're going to pull back, I don't know. I'm hearing around 200 to 220. We'll see the pullback. It seems like the options market is kind of pushing up to those levels. So whether we actually get there or not, I don't know. We've got the FOMC meeting next week. I think that's going to swing us one way or another. And I know somebody in here, I don't know where it was. Somebody was saying that somebody mentioned them pausing already. I don't think we're going to see a pause. I think we're going to see 25, maybe 50 basis point hike next week. But I think that's going to swing us. So if we get through that clear, we might push up to that 220 mark. It may be a delayed reaction too. So we may get something that comes out that kind of seems bearish, but the market rallies anyway. And then we pull back afterwards and get that little bit of a rug pull. But yeah, so I think we are coming to a point where we're due for a pullback. I don't know how far down though. Let's see what else we got in here. You guys are awesome. Thanks for joining us on this Friday night, guys. Oh, here we go. Now, did you all like when he promoted Twitter? I actually love it. Yeah, and that was my thought too. So going back to that whole conversation, I thought about the fact, in talking with Brian, depending on how obviously Elon wanted to, he swung it that way. That's how he viewed it. But, you can also look at the brand recognition of they are currently have more orders coming in than they can keep up with for production. So obviously, even if there was any sort of brand damage, they can easily repair that by dropping the prices of their vehicles. So, and they still have plenty of room that they can drop the prices of their vehicles if they wanted to. So yeah. So brand damage only goes as far as your, pocketbook is going to allow it. Let's get the likes to 69. Yes. I can't even see it on my end, so I don't know where we're at, but that sounds like a great idea. Oh man. So what do you think we're going to get for the FOMC meeting next week, Ben? You think we're going to get 25 or 50? Or do you think they're going to pause?
I'm going to guess 25 because I think that I don't think they're going to pause because they've made it so clear that the number one priority, we'd rather overcorrect than undercorrect because that pathway would be far worse in their eyes. There's a lot of talk. Obviously, CPI has been coming down, but I don't know. The price of eggs is still pretty high. Things that actually matter are very high: food and energy, the two things excluded from CPI that actually matter. So I don't know. I would say we got one or two more raises, and then I think it's got to hold there for a while. And that's another thing I'm really curious to see. I don't think we're fully out of the woods yet, so I've kind of been being cautiously optimistic. It's my approach to 2023. What do you think?
So I'm thinking they have to show us that they still want to keep the pressure on. If they tell us that they're going to pause right now, the market's going to run, and they don't want that because that's going to end up causing inflation to go back up. So I think they're going to do a 25 and then see how the next two CPI readings come in for February and March, because then the next FOMC meeting is after the March one. And I think at that point, they'll either do the pause then or another 25 basis point hike, just to reiterate that, by the way, we still mean this. We understand that inflation is coming down, but we also don't want you guys to get too excited too soon. And we need to make sure that we squash that. And that's basically what they've been doing all year long, because as soon as they make that pause, what we're going to end up seeing then is big money is going to come out here and they're going to do the math. And they're going to say, all right, well, if they're pausing now, when are we going to see the pivot based upon inflation data coming down? Once we see that runway for 6 months, that's when the Fed is going to end up pivoting. That's when we're going to start seeing the run going up into the pivot. And so I think the Fed just kind of wants to push that off and delay it as far as they possibly can. And so I think 25 and maybe another 25 in March is what we're going to end up getting.
Yeah. And then the way it affects the market I'm very curious to see how this plays out, because I believe the statistic was, somebody fact check me on this if I'm wrong, but I think World War II was the only time where the stock market rebounded before the stocks usually rebound after the rate hikes stop. Not after they stop, but when they start coming down. So I just feel like we're very far way away from that of the rates coming down. Because like we just said, probably got another hike and then they're going to stay steady. So what does the world look like in 6 more months, if that is the case, right? So I don't know.
Yeah, and that's the thing is, and the market usually looks 6 months ahead. And so I remember when Chicken Genius threw out the charts of all the rate hikes, and you kind of see this little bit of a ramp that goes up into the rate hike about 6 months in advance. You get to the pivot, and then when we hit that pivot point, we drop down sharply like a sell the news situation, and then we V-bounce out of it. So I think that's why when we get the pause and an indication that the Fed is going to be pivoting, that is a key time to buy. If you're trying to time the market, that would be a good time to buy. And then wait till the Fed pivots, and then wait till it comes crashing down afterwards, buy in at that point, and then we'll come up from there. So not financial advice, but if you're looking at the charts and you're someone who swings like that, just pay attention to those things and do your own research on that. But typically that's what has happened. Oh yeah, here's Harry. If you believe in EV adoption, why sell when they are selling 1.8 million units and an 80 million units sold market? Exactly. And as we were talking before, EVs are only making up 5% of the global automotive market. And obviously EVs are going to be taking over the entire market, even if it's only 90 to 95% by 2035. Most countries that have significant sales in vehicles are going to be regulated to go with EVs. But as Vin pointed out, we're going to hit price parity well before then. And most consumers are going to be going with EVs anyway for so many different reasons. And so if that's the case, not selling anything until then just doesn't make sense, because there's so much of the market for Tesla to grow into.
Yeah, they have what, probably 0.2% or less of the total market. I mean, there's a
And that's
long runway.
anytime I have any sort of discussion with Tesla Q about Tesla's market share dropping, I'm like, dude, I was like, how many times do we have to say it? It is not the EV market share, because if Tesla has 100% and anybody comes in and sells one vehicle, guess what? Tesla's market share just dropped. Like, that doesn't work that way. You have to look at the entire global automotive market. And when you're looking at the entire automotive market, Tesla continues to grow quarter after quarter, year after year.
That's what we need some charts of, is because the EV market, yes, their EV market share is going to continue to shrink. It's still going to be dominant, but their share of the global market, that's the more important chart to be looking at, and that's just going to keep growing.
I don't know if I can find it, but I do have that chart. I made one.
There you go. Let's see it.
Let me see if I can find it and see if it's even clean. And it was from a while ago, but that's the part that frustrated me. And that's just like, and I made it specifically to show, because like somebody was calling me out on it. I'm like, screw you, buddy. I'll figure it out. And I even used, so the chart that I made was made with, I can't even find it. The chart that I made was even made with Tesla Q numbers. And I still proved them wrong.
Look, it's like when you factor these things in, EV adoption, mass EV adoption is coming, be it through trend, be it through Orwellian doctrine, be it through people just realizing that EVs are superior products. They're more efficient. They're more convenient. So yeah, like Tesla is probably at 0.2% or less of a 100% of the market. So there's no, I don't buy into this demand argument. And especially as the cars, they just demonstrated the pricing power. If we do, I mean, the fact that they cut those car prices as much as they did, and they're still projecting over 20% auto gross margins, that's incredible. They could drop them another 19% if they really wanted to, if it ever really got to that point. I mean, I don't think that they will have to, but they have another 19% of margin to play with. Nobody else can say that.
Oh, I know. And that's the whole thing, is like, and even if Tesla, comes down the prices, like nobody else is making money. So they're toast. And like Elon said too, he's like, the thing that a lot of people, he's like, only the very savvy investors, and I know Omar talks about it all the time, is what people don't understand is if you have an ICE vehicle, that ICE vehicle is what it is for the life of the vehicle, and it's just going to depreciate and not get any better. When you have an EV, especially a Tesla, you have a vehicle that is not only going to get better over time, but it becomes like a smartphone. You're going to be able to buy software for it. You're going to be able to buy FSD for it. That vehicle is going to continue to make money for you, and in a different way than you're going to have from ICE vehicles. So when you have legacy auto, where do they get their margins from? They get their profits from the sales or from the service and parts for those vehicles. So now Tesla is providing a vehicle that if somebody does want to purchase anything extra for the vehicle, it's going to make it significantly better for the consumer itself and still provide Tesla what those major profits and margins. It's a win-win, because when a consumer for an ICE vehicle is doing that, it's because they have to fix their vehicle and make it back to sort of where it was before. Whereas for a Tesla, it's going to make it better than it was before. And that's a big piece that people are missing out on.
I think this is a perfect segue into what I found was the last major point from the takeaway from the earnings call, is that Tesla's a manufacturing company. And today you're investing in this EV business that is utterly dominant, that just alone, you can make the argument, justifies the valuation, being the EV leader who's light years ahead, who's the best at manufacturing, who's going to make 20% auto gross margins. Just on that fact alone, it's probably worth what you're paying today. And then you're getting a free call option on, as you mentioned, full self-driving, energy, insurance, robotics, Optimus, humanoid robots, real-world artificial intelligence. I can go on. And you're not even paying for any of that. So It's crazy. And the fact that they mentioned this in the call again is that Tesla's a manufacturing company, and long term, their biggest competitive advantage is going to be their manufacturing ability. Whatever needs to be built, they're going to be able to do it. They're going to do it better, faster, and more efficiently than anybody else. I mean, that's all they have demonstrated so far, and they're still in their infancy.
Yeah. And that's one of the things that, Elon has said many times, like the product that they make is the factory, not the vehicle. And yeah, I'm just waiting for when Optimus starts helping him in the factory. I'm not holding my breath on it, but when that happens, talk about, cost cutting and when all of a sudden labor for one laborer is now going to cost them $10,000 forever versus, $50,000-$60,000 for a year.
Yeah, their margins, another, I think, fallacy is like this bear argument is that they've only had these amazing margins because they were the first mover and there was no competition. No, it's because they're continuously innovating. They're improving on these margins, on their overhead costs, finding better ways to make the vehicles, deleting parts that are unnecessary. If they can't get it somewhere for cheap enough, they make it themselves. And these are the things that are going to keep those margins high. And then, oh my God, if you put in the robots, forget it. If that comes to fruition, which maybe in a couple of years, but I don't know, that's moving real fast too. They could surprise with that. There is so much crazy potential with it. There was a few quotes from Elon on the earnings call that I loved. I think they summarized Tesla perfectly. Number one, Tesla has the most exciting product roadmap of any company on earth by a long shot. I would agree. Would you?
Yeah, and we don't even know it. Like, just based upon what we know, it's exciting. And there's a lot of stuff we don't know.
Number two, we have more great ideas than we know what to do with. Good problem to have. Number three, reiterating, long-term, I'm convinced that Tesla will be the most valuable company on earth. Elon said this again on the call. And the final, fourth quote, my favorite, was when they asked about competition. He said, right now, I don't think you can see second place with a telescope.
And then, of course, they had to chime in and talk about one. And now, when I listened to that too, I know full well he was going straight for the AI piece of it. And, then I don't know who it was that chimed in. I didn't recognize the voice, but when they came in and talked about, the actual EV sales and production, where China is there, and even Elon admitted that when it comes to the actual vehicles themselves, China is going to be the competitor. Sandy Munro has said it. They're coming up. But yeah, when it comes to FSD and AI, like nobody. And that's the other thing that people don't think about either. When it comes to legacy auto, who is doing their AI? Who is doing their software? Not them. They're not going to make any money on that. And then you realize that this is why they're bringing other ICE vehicles and pushing hard for those still, because where Tesla can get all those extra profits and margins later on from software, legacy auto isn't, because they're going to outsource it. They're going to have a third party doing that. Maybe they'll partner with NVIDIA. Who knows? But it's not going to be legacy that's going to be making that money.
I see. Yeah, that's a great point too. Is their competition is if anyone else can compete in that AI software space, and even that is going to be very challenging. I mean, Tesla seems to be clearly in the lead, in solving all these real world artificial intelligence things.
Oh yeah. Let's see. My posty art. Tim, do you see at least 3 more splits by 2032? Doing the math on it, seeing as where we are right now, it's going to come down to how quickly the economy recovers, in my opinion. Originally, before we ended up seeing last year happen as it did, I thought we were going to see one in 2024, one in 2026-ish, almost every 2 years, I thought we were going to see one. Clearly, I did not pay attention to the macro environment close enough. So looking at that now, I think we're going to get one in between 2025 and 2026. I think we see one, because I think at that point we'll start pushing closer to that $1,000 mark. And that in the past has shown us they don't want to push too much higher than that, because for a multitude of reasons. And the same reason that they said before, they want to make sure that retail investors can be able to buy in. So they'll bring it down. So I think probably 2025 to 2026. And then at that point, maybe one more before 2030. Because you have to remember too, unless they're doing significant buybacks, when you start doing more and more splits like that, going back up to that $1,000 level or whatever it's going to be where they want to do a split, it takes so much more to get up to there. Now, also keeping in mind, when it comes to institutional investors, we're still only, I think last I checked was like 43% institutional holdings, where you see like the Apples and Microsofts are, I think, around 65 to 70 now, because and that's just because some of the liquidity came out of the market. They're usually up around the 80 to 85% mark. So, we'll have big money still pushing it up there. So I can see definitely two splits by 2030, and maybe by 2032. If we'll give this a big if Optimus is going to volume production and being sold to consumers, we will definitely see a third one by 2032. And if that happens by 2030, what do you think, Vin? You think we're going to see some splits by then?
Yeah, I mean, inevitably, companies that do well do splits periodically. So yeah, I think on the current trajectory, yeah, you probably have at least 3 more by 2032 if things keep going to plan.
And then do remember too, when you're looking out long ways, probably every 10 years or so, we get a situation like we're in right now. Whatever causes it, whether it's a .com bubble that crashes, a housing market that crashes, a COVID that crashes us, whatever it is, something typically comes up around every 10 years to put us in this. So 2032 would be around that time frame that we would get another one of these type scenarios. So again, the thing that I learned the most from the last year and a half to 2 years is this is a 10-year cycle. This is how Warren Buffett makes all of his money. Well, not all of it, but this is where he learned to make a significant chunk of his money. Is you look at 10-year chunks of time. Generational wealth, generation is about 30 years. Typically every 30 years, people have children. And so within that generational time of 30 years, you're going to get 3 cycles to be able to rinse and repeat your money like this. And if you follow those cycles and you see the run coming up and you kind of see some of those signs, you stop adding, you start building up that cash, wait for that pullback to come. You get into a time like this where you have a ton of cash sitting on the sidelines. And then we've already seen big money starting to DC slowly into the market again. That if you just follow how big money does it, it's pretty simple and pretty straightforward. And you just do what they do. Cathie Wood has been buying Tesla regularly for the last month. And where was the bottom? Over the last month. It's really not that hard when you look at it from a larger picture, and then you start doing that. And then, all right, now you've made all your great buys. And this is why they say fortunes are born during bear markets. If you saved that cash and then dumped it into the market wisely during the next year or so, when we come out of it, you're going to make a ton of money. That is all going to multiply over the next decade, rinse and repeat. Here we go. What year will be the last ever ICE sold in the US? I'm going to say mid 40s. Man, I mean, it's tough because we know that the US, well, state by state, they're starting to go 2035. There's going to be some holdouts like Wisconsin, Oklahoma, or whoever.
I don't know that you ever fully get rid of it.
Yeah, Wyoming's like, we're going to ban EVs. I'm like, come on, dude. Like, what is this?
Yeah, I think like at worst, it's always going to be like a niche market. I mean, but I think a more interesting question is like, what year do EVs actually outsell ICE cars? When do you think that would be?
That to me is the bigger number. And like you said, I'm more in the camp with Vin as well. Like, I don't think banning anything is really the way to go for these cars. It's let nature run its course. If people still want to buy ICE vehicles and spend money for something that's not as good, so be it. But the majority of people will go out there and buy the EVs. So I think that price parity turning point, I'm going to go with 2026 will probably be it, is when we're going to see it, because by then Tesla will have out that sub $25,000 car or sub $30,000 car. And at that point, that is when they really hit that sweet spot in the market. And that is when volumes are going to take off. And by then we might see some of the Chinese makers coming over to the US also. And that's going to be huge.
The free market is social Darwinism. It's survival of the fittest. It's going to happen that naturally EVs become the car of choice. And I think it all comes down to how many cars can they produce and how are we looking with the raw materials and the batteries, which obviously we're going to need a lot more of, which Tesla's fully aware of and probably has some tricks up their sleeve on that. But I think that's going to be the determining factor. I mean, yeah, probably maybe 5-10 years out that they start to become the majority, maybe 10 if things go real slow and we really have shortages of the materials. But you'd have to think that everyone sees where we're going now and that we don't hit another they're going to start putting in place. They already are like getting these raw materials that we're going to obviously need a tremendous amount of.
Oh yeah.
What do
Yeah.
you
And that's why they're
think?
doing the lithium refining. I mean, that's it.
What do you think? You mentioned the cheaper car, 25K car, maybe. I wonder if they really need one, or if the Model 3 is just gonna eventually get that cheap, or at 30K. I mean, I think that's cheap enough when you factor in the incentives. Maybe it goes down a little more. Will they really come out with the cheaper car, the cheaper mass market car? Like, I guess they will, but I could also see it being that taxi type, autonomous car. Just
So I
skip
think it's
right
going to
to
be,
that.
I think it's going to be twofold. So when it comes to the robotaxi, I think that's what's really going to dominate the cities. Because that's going to be the most cost-effective way to get around in the city, will be in a robotaxi. I think when you go into more suburban areas, you're going to see more of that compact car. That's going to be like when we saw, the Jetta in the late 90s. Just everybody had a Jetta or a Honda Civic. I think the Tesla Model 2, we'll call it, I think that is what we are going to see happening when it comes out. And I think that's going to be a very important vehicle for them. So while I think the Model 3 will come down in price some more, it's not going to be what they truly want, because essentially they need to separate the Model 3 from the Model Y, because the Model Y is cannibalizing the Model 3 a little bit with the price cuts that they've done. So I think Project Highland is going to help the Model 3 with that. But I think they're still going to need that one lower tier vehicle that is going to be even less frills. They're going to take some things out that, the kids aren't going to need, whatever. They'll have it in there. And it's going to be basically like your kick around Tesla for hey, your kid just turned 16. Here's a Tesla for you. And that's it. And I think that's what that model is going to typically be. And we'll see a lot of those. And that is going to be that giant mass market. I know Stephen Mark Ryan talks about one that's going to be sub 18,000. Whether we get to that point or not, I don't know. Maybe don't even need it, especially with this EV tax credit. If you come out with a vehicle that's 28,000, now you have a $20,000 car, so you're good.
Yeah, the EV tax credit may very well have changed their plans as well. I mean, it definitely makes a big difference.
Oh yeah. Yeah, so I think we'll see it coming out, and I do still think we're going to see it in 2024. I think they're going to announce it, and my personal feeling is that they're going to. It might even be a situation where they're like, "Hey, by the way, going on sale tomorrow, we have this new compact car, and it's going to come out," and they're immediately going to get sales on it, because I don't think they're going to do an announcement and then all of a sudden in 6 months come out with it. Because if that's the case, they're going to have a giant lull in sales for 6 months, because people are just going to wait. Let's see what else we got here. My post here: Tim will move to Mars with all the Tesla Timaholics. So looking at that, I know somebody had mentioned it earlier when they were going to sell, and they're going to sell when Starship lands on Mars. And I think that's brilliant. I think that's a great idea. And I do want to go to Mars. If I ever get the option in my lifetime to go to Mars, even if it's the last place I go and I don't get to come back to Earth, I want to go. I love traveling and adventure. And, I want to go to every place I can on Earth. And if I can go to places that aren't on Earth also, that would be amazing.
Lots of big mountains to hike over there.
Oh yeah. Probably very few people on them also.
Could film. You'll be doing your live streams on the top of what's that? The biggest
God,
mountain on
awesome.
Mars.
Oh my God. And at that point, maybe
with
I'll have
Starlink service.
I'll have 1,000,000 subscribers, and we'll have everybody watching my live stream from Mars. That would be awesome. Let me see. Tim Vin, do you see a buyback this year? Which gap?
Well, I'll say I'm glad they didn't do it in the last few months when many were practically begging for it. I mean,
everybody barking for it. Yeah.
I think they're gonna wait, not in the next few months, definitely, because they want to be prepared, as I think they should be, for if we hit a severe recession. It's nice to have that 22 billion in cash or whatever it is on hand. I just don't see the point right now. I'd personally rather they didn't, so that I could just keep buying shares, save the buybacks for when we're clear, we're fully in the clear, and FSD is solved and everything. Yeah. But I would say definitely not like the first 6 months, because there's a lot of uncertainty still in the air. What do you think?
Yeah, I'm in the same camp. When everybody was screaming for it, I'm like, initially I was like, yeah, this is a great idea. And then I took that step back and looked at it from the macro environment standpoint. I'm like, no, you know what? Like, think about when big money buys. they're waiting. They know there's still uncertainty in the market. They know the Fed still has some things to do to straighten the economy out. It's just not wise to buy. And then, I'm glad nobody even mentioned it on the earnings call, but just the fact that they were talking about, Elon said it's great to have all of this cash because during a recession, that is what you want. You want as much cash on hand as you possibly can. So until we get some sort of clarity onto how big and bad this recession is going to be, Tesla will not do a buyback. They're not going to announce it until they know what the recession is going to look like. Once they get clarity from the Fed and they get an idea, this is when we're going to see all of big money coming to buy back into the equity market. And then Tesla will also do a buyback at that point. I could be wrong, but I have a strong feeling that's how it's going to play out.
And Elon mentioned on the call, with these interest rates so high, all of a sudden that cash pile is getting a pretty nice return just sitting there. So,
did you see that $4 billion investment that they made on their earnings? There was, let me see, I'm going to pop it up here. Let me see if I still even have it up. Oh, here we go.
The other thing with the buybacks too is like, if you're a long-term investor, there's no benefit right now unless you're trying to cash out in the next year. The only people the buybacks would benefit is fund holders, the ARKs of the world, institutions. So I think for that regard too, if Tesla does seem to value the retail people, I mean, it's not really to our benefit in the short term. Again, if you're a long-term investor.
Oh yeah. So here we go on here. So if we look, there is this purchases and investments line. Let me get over to it here. Yeah. So purchases and investments. So they typically were like 100 million, 380 million, $4 billion. And somebody on my live stream on Wednesday pointed it out. And I'm like, what is that?
It's got to be a factory, right?
Well, no, because I don't know if that's what is considered an investment. So Gary Black had asked the same thing on Twitter. He's like, I wish somebody had asked what this was. Obviously, it couldn't have been a retail because that was done well before the earnings. But, one of the analysts who were on there should have asked, like, this is glaring right here. So what is that $4 billion? Because, looking at investments, who knows?
I'm sure we'll find out on Investor Day.
Yeah. And so then I thought about it. I'm like you and I talked about with CDs, if they put $4 billion into anything CD with like giving 4% return, that would be giving them, and somebody had pointed out before, based upon their other investments,
$1 billion.
They actually have more money coming in from the money that they have than they have in interest payments. So they don't even need to worry about so they don't even have debt. And then they've got that line of credit that they opened up as well for $5 billion. So who knows what they're going to do with that? I think for them, it's just because they're not sure about the recession. So they probably put that money and they decided to get themselves a cash credit line just in case they need something as a backup. Unless they plan on opening up a third gigafactory this year, and who knows? Oh man. Technology. Let's see what else we got in here. I have no. When will Elon start by another company? Any bets? 2025. So think about when Elon said he's not going to sell shares again. It's not till 2025. By then, Twitter's going to be up and running. He's going to want to buy something else. That's going to be it. I think at that point he's going to buy GM. Who knows? Let me see. Harry, let me see. Harry, no 25K car. Must never agree to it. He actually did say that they were going to do it. Somebody just on Twitter had mentioned it. Back in 2018, he said that they would do it. And he has even said recently, they are going to do one of them. They know that they need it. They will do it. It's just a matter of when. Let's see. Oh, here you go. Karav. Vinny, do you have a price target for when? This year? Yeah. What's your price target for the end of this year?
Well, let me pull up my little PE chart here. It all depends on what PE ratio the market wants to assign to it. And let me find it. Like, I think their EPS, the consensus is kind of all over, but maybe the average was what, $5, $5.50?
I think so. Yeah. I think that's what it's at.
Let me pull this up.
What do I have? I think I have $4.07 was EPS estimate for the end of this year? Because I think I'm in at 404.
I think that the way I see it is the worst case scenario, let's say they only grow 30% this year. I can't find this thing. So maybe you'd assign them like a 30 PE ratio at that point, 35. And that basically gets you where the stock is right now. 150 to 180 range, somewhere in there, maybe. That's in if they only grow 30%. If they do grow 50%, the market wants to give them a 50 PE ratio. Now you're talking probably $250. So I think this is all dependent on the macro. But if Tesla can grow 50% again this year, and the market wants to assign it a 50 PE ratio, stock price should be at least $250 if they earn $5 a share.
Yeah, and I know Gary Black just dropped his. I think I think he left his price target as like 340 or 370, something like that. So I'm below where he is. I'm actually updating all of my price targets tomorrow. So tomorrow, guys, I will have out my hopefully tomorrow. I've got to go work on the weekend. Woo! But hopefully I will get out the video for my Tesla and Air and my price targets through 2033. Let's see. My post here. Would you move to Mars when Elon makes it possible? Oh yeah. I just got to see what's going on with my son and any family that he has. But yeah, I would totally go. Even if it's an extended vacation up there, I would totally do it. Let's see. What else we got? Oh, you guys are super active today. It's awesome. I mean, when we got a day like a week like this. Oh, Harry, Disney has a PE of 70. I actually own Disney. I didn't even check their PE. That's insane. Like, why would crazy. Disney of all companies have a PE of 70? I almost sold my Disney today just because I'm trying to free up more cash. But then I remembered that Disney got rid of their dividends recently when COVID hit, and they haven't reinstated them. So I took away my sell order because I have a feeling Disney's going to pop when they decide they're going to be doing dividends again.
See, I think the problem is I don't know that they can because they've entered this streaming war, which they had. I mean, it was a good move, but it's just not a good business to be in. It's a race to the bottom because it's like they just are going to always need more money to pump out another mediocre Star Wars show. That's the problem. All these things. Oh, don't even get me started with Disney. These shows could be like a great 2-hour movie, and they just, string you along for 8 episodes that half of them could be cut, and because they have to, they gotta keep people subscribed.
So as we were talking about, I wonder if, Elon says he wants Twitter to become the everything app. I wonder if Twitter would ever have its own streaming service of some sort. Unless it was going to be like hey, you can come to Twitter and you can stream all of your streaming services from Twitter.
That is crazy, though, that Disney has a higher P ratio than Tesla. What's their projected growth rate for this year?
Yeah, no kidding. Like nothing.
Tesla's PE is 44. 44 PE right now, and that's after I'm not sure if that accounts for this spike. 52 as of January 27. So
yeah, so a 52 PE, which is, man, that's ridiculous. But this is how the market works. So, here's a good question for anybody who has it. How do EVs handle driving in the snow? My friend Tony, who has his Model Y, says it's phenomenal. He says he has no problems whatsoever. So one thing I would like to know if you guys have one is the rear-wheel drive, like a rear-wheel drive Model 3. And I ask because anybody who's driven a rear-wheel drive vehicle in the snow or even rain for that matter.
For us Northeasterners.
It could be squirrely. I mean, I had an 89 Mustang, and even on just wet roads, that thing was a nightmare to control. So I would imagine that anything rear-wheel drive would be it. But the other thing too is, and as we've seen with the Teslas driving through deep water, because the battery makes the vehicle so heavy, it has a super low center of gravity, which makes it easier to control. So that definitely plays into it. But yeah, here we go, Raymond. So Raymond, does it work well in the snow? Because I know like the all-wheel drive is phenomenal. No issues whatsoever with that in the snow. Let me see. And I wonder how it's going to drive on the moon or on the moon or Mars. We'll see.
Yeah, the Cybertruck. The Mars
Oh, yeah.
rover.
So how'd you feel about that when they basically said it's not coming as soon as they thought? There's a little bit more of a delay.
I'm not I'm not surprised. I'm not really. Look, the Cybertruck, when it gets here, it's going to be amazing, and they don't need to rush it. That's the beauty of it. I mean, there's a whole other route with this, with pickup trucks, and let me get to that in a second. But as far as the Cybertruck, they don't need it right now. So
Right.
they've made it clear, like, they're just going for market share. So adding the Cybertruck to the mix now would actually slow them down. It's going to, the result will be that they actually get less market share. So when the time is right, I mean, the timeline makes sense. Obviously, always take their timelines with a grain of salt. Maybe mass production next year, but when that Cybertruck comes, it is going to be kick-ass. It is going to be their best product ever. There's not a doubt in my mind. And another thing that's crazy, you want to talk about crazy margins? Pickup trucks are the cash cow for every other automaker who makes one. So just
that's
imagine.
why Ford held on to that's why Ford went right to the Lightning immediately.
Exactly. And that was a very good move by them.
Yeah.
At least some companies are doing some things right. Tesla Cybertruck. I don't know if you saw the Sandy Monroe Live video. They were saying possible gross margins on that thing like 40%. Yeah. And with Tesla, it's anything is possible. So when that thing comes, oh my God, is the game over?
Oh yeah. And when I was talking to Brian the other day, he said this is what's going to happen with Tesla is one morning you're going to wake up and things aren't going to be the same anymore. They're just going to change for the better. You're going to wake up one morning and guess what? Cybertruck is here. And we're not going back. It's here. One day you're going to wake up.
No one will
FSD,
care how long it took when it comes out.
And then
so
one day
awesome.
You're going to wake up. FSD is solved. And guess what? We ain't come when those days happen, coming back to a stock price that was lower probably is not going to happen again.
Yeah.
Oh, here we go. Robert, I love this. My bro, Tim, as I saw the price go up all day, I knew you simply couldn't wait to get on the air and smile. Oh, man. And just so you guys know, to go on to a personal side stand thing here is at my job, we are doing company-wide inventory. Let's just say that if we're going to compare it to Tesla and the automotive market, my company is very much legacy auto, very much. We do not do things in an efficient manner. We don't plan. We don't think. We just react. Like, I've worked at many companies doing inventory. They usually give you like a 9-week prep to go up there, all these different things that you do, and then you count in a very logical manner. Currently, they gave me 1 day. They said, oh, by the way, your inventory is coming up next week. We're going to give you the paperwork that you need for it. But the day that you get it, you're going to be going into another branch to help them count. So I had to help yesterday in another branch doing inventory. I had today to do it. Now I have to go into work tomorrow on my day off. And then everybody's coming in Monday to work on it. So every day at my job, I'm like, I work for Legacy Auto and I want to work for Tesla. I really wish I was with somebody who innovated and just listened to something that would be more efficient. Like, it kills me being with somebody who's not efficient. So then it makes me wonder how it is to work for Legacy Auto. I know a few of my subscribers do work for Legacy Auto, which is hilarious because they say they put their paycheck into Tesla stock. So literally Legacy Auto is buying Tesla stock.
They don't want to go down with the ship.
Oh man, that is great.
Well,
here's
you got your green sweatshirt on, and you'll be your own boss soon, and then you can move at Tesla speed, warp speed.
That is the plan, and we are working on it. This year, I have major plans to bring this channel and my business up. Jerry, when does Moody's give Tesla investment grade status? I know Alexandra thought they were going to get it earlier this week. Should be soon. I mean, after we got this run that we got, and after we got all the information. Unless they're waiting for Investor Day to get really more clarification on new vehicles coming out, it's coming soon. What's your thoughts on uploading yourself to a Tesla bot and being immortal? Actually, like you see like the heads in, what was it, Futurama or whatever. So one of the things that I think we will end up having, and this is way down the road, is when we get to a point where Neuralink is up and running properly and we'll have Optimus. So literally you can think whatever you want and Optimus will do it. And you don't even have to speak. because your thoughts are going to go right over to it. I have a feeling way down the road that kind of technology will exist, but whether you're actually going to put your own consciousness in a Tesla bot to be it, I don't know. I don't even know if I don't know if I could have my consciousness live on forever in a Tesla bot. Maybe I'd do it. I can go live on Mars forever, and when we go to other planets, I can move on.
Wish I could do a blur effect, sci-fi, reality. It's all meshing together in the near future.
Oh, here's a good one. How will FSD handle getting stuck in the snow? I will actually check with my friend Tony on that. If any of you guys have FSD right now and you've let it run in the snow, let us know how it operates, because that's actually a good question. I would honestly, when I get mine, I'm probably going to end up going on the monthly subscription just so I can try it out. Because I think for me, until they solve it, what I'll do is I'll do monthly and I'll be like, I'm going to try it out this month, let it go, and then I'll stop it for a month until they come out with an update, and I'll try it again. I'll try out all the new updates. But I would definitely take it to a parking lot where it's full of snow and like purposely get it stuck just to see how it would work getting out. That I think is a great idea. Yeah. Oh my God, we've been for almost an hour and a half, but it's been such a good day. This is awesome. All right. Not much left in here. You guys have been awesome tonight. Anything else you want to add to this, Vin?
I think we covered a lot. This is a fun stream as always.
Oh yeah,
a lot of positive news. I need to change these red lights to green.
Yes, definitely. Oh my goodness. Well, thank you guys all so much for being here on this Friday night and enjoying this. Finally, a very good end to a week for once. Let's see if we can continue this going on. Otherwise, we will see you guys later. If you haven't checked out Vin's channel, Investment Club, please do so over there. Also, check out his Substack. He's got that. And I don't know if there's a link to it, I'll throw it in the description below so you guys can check that out. So otherwise, we will see you guys later.